I've acquired dozens of businesses and helped finance dozens more. And here is your quick and dirty guide on how to buy a business. Now you're gonna wanna save this one because we're gonna hit on a lot of topics really fast. First, you need to take stock of how much money you have to put down, what your required salary is, and of course, your interests and your skills. So required salary is something that's used in your debt service coverage ratio calculation, DSCR, when you go to buy a business. So what the bank is gonna look at is what cash do you need to support your lifestyle, and they're going to take that into account when underwriting the business. So the more frugal of a lifestyle you live, the lower the hurdle there will be for the business that you're trying to buy. If you live a very lavish lifestyle and have lots of payments, then you're gonna have a higher hurdle. Here's the formula for your required salary. It's going to be your monthly debt service. So this is going to be your rent, your mortgage, your car payments, your student loan. We're gonna divide that by 0.4 and then multiply by 12 for 12 months in the year. And that's going to give the required salary for your DSCR. Now, this is not how much money you wanna make or how much money you're gonna make in your business. This is how much money you have to make, and it's what the bank is gonna use in their calculations. Now, your down payment can come from cash, your non-retirement investment accounts, can also come through home equity loans, but in general, you can't borrow your down payment. You can't use a credit card, you can't go take a personal loan, you can't borrow money from your parents or another family member. If you do get money from a family member, they're gonna have to sign a letter that says that that was a gift, not a loan. So basically, you can't borrow your down payment, but the exception would be the home equity loan. The home equity loan is not considered borrowing for this purpose. You can use retirement funds, your 401k or IRA, through what's called a ROBS structure, rollover of business startup. But in this instance, your business is owned inside your retirement account. So essentially your retirement account owns it, not you. And there's some tax and legal ramifications for that. That structure is really a last case scenario. You typically don't want to do a ROBS unless you have to. We do have a calculator on our website that can help you figure out your down payment and what that means for your business acquisition, just at owneractions.com/down payment calculator. And to turn that down payment into what you can potentially spend on a business, today the SBA requires 10% down payment, but all of that can actually come from the seller in the form of a seller note that's on a 24-month standby. So what really comes down to is what the bank is going to require. So the government's requirement is $0 from you, but the bank is going to require something from you. They're not going to likely do a no money down loan unless you are currently working for the business you're trying to buy. You can do 0% down to buy a business you currently work for. But in other instances, we see it's 5% for most situations and 2.5% down if you're really buying a business that you have really strong industry experience or a really strong background in. And the way that you can find out what you can spend is just take that down payment that you had just calculated and figured out and divide that by either 2.5% if you're planning to stay within your industry, or divide it by 5% if you're going to go with outside of your industry. And that'll show you what you can spend on your down payment. Next, you're gonna wanna start looking at the popular business listing websites, BizBuySell, BizQuest. Start looking through businesses, really learn about what fits your interests and your personality. It's gonna be about finding a good match for you. That's gonna be one of the most important things. The businesses you're looking at should align with your background. If you have no home service experience whatsoever, it's gonna be really hard for you to buy a plumbing or an HVAC business. You don't have the license, you don't have the experience, you don't know the industry. You do have things that you know that are in your background that will translate very well to business ownership. One of the tricks is finding the industry or the businesses that really match your experience and your background. Now, when you're looking at these sites and you're doing a live search, you typically want to focus on newly listed businesses. You're really just wasting your time with stale, old businesses. They're there for a reason. The numbers aren't true. They're not financeable. There's something wrong there. Most brokers that have businesses listed, they're going to find the buyers they want to work with pretty quickly within the first few days. So you really want to hit the things that are listed. You want to get there within the first 24 hours. Most sites only let you search by things that have been listed in the last 3 days. So you should always have your filter set to look at what's been listed in the last 3 days that meets your search criteria. Now, if you find something you like, you're going to want to run it through our debt service coverage ratio calculator. So we said that's the bank's measure of the business's ability to pay the debt. So the required debt service coverage ratio is typically 1.25, which means that the business can cover 125% of the loan payment. And of course, when they say whether the business can cover it or not, they're going to take that salary into account that you had already figured out. So use this calculator. It's totally free, owneractions.com/DSCR. Run your deal through it. It'll give you a good idea if it's financeable and if it's something you should spend time on. Now, if this deal appears to work, you're gonna wanna dig in deeper. You're gonna want to make a submission to the broker for more information. Now, in this submission, it's really important that you sell yourself to the broker. If you just say, hey, I'm an investor, I wanna buy this business, they're not gonna call you back. You have to show why this business is a good match for you and your skills, and why they're going to be proud to take you to their hard-found seller. Brokers work really hard to find these listings, so they're not going to take any buyers that they don't think meet the right criteria to meet with their sellers. So sell them on why you. And if you can't sell yourself because you're not a good fit for the business, you should be asking yourself, why am I looking at this business? So once you get all that information, go back to the DSCR calculator, run through the numbers that you get in the financials that you receive from the broker. You're going to find that often they don't line up with what you saw on the website. So now that you have new updated numbers, you're going to rerun that DSCR calculation. Then if it still looks good, it's time to schedule a call with the seller. Now, during that call, you're going to cover a wide range of topics. Some of the most important things are going to be, what does the seller do in their day-to-day? What is the cash flow conversion cycle? So when does money come in? When does money go out? You want to learn about the employees, who does what. You want to learn about how they get customers. You want to learn how sticky are the customers. Generally, you're just going to want to learn as much as you can about the business. You're also going to want to learn how many sellers are there. Is it only one person or is it multiple? How many people are you going to need to replace? If you have a company with 6 employees and 3 of them are leaving as part of the sale, that's going to be really hard for you to take over. So you want to figure out who's leaving and who's staying post-sale. And part of learning that cash conversion cycle is really nailing down what working capital you're going to need to run the business. Because if you run out of cash, you're out of business. So you really want to figure out how much cash the business needs to survive. By default, we typically just make sure that we have 3 months of expenses in cash on hand. We can typically justify that to the banks. The banks want to see you have plenty of liquidity. If it's a little bit tighter, you might need to look at it in a few different ways. You might have to exclude maybe some raw material costs from that, because you're not going to be ordering the materials if you don't have the work to do. So that can line up. But you really want to spend some time on figuring out the working capital. Some of the accounting formulas, I feel, don't work that well at calculating what you really need. You need to make sure that you understand the business, like we said, when money comes in, when money goes out. And some of that, the bank, and you need to really understand that, because not only do you just need to understand it to run your business, the bank is going to quiz you on that. They're going to spend a lot of time. The underwriter is going to ask you a lot of questions to make sure that you know that inside and out. And if you don't, then you're going to fail and they're not going to do the loan. Now, if everything checks out, you're going to want to put in a non-binding letter of intent to purchase the business. And in that LOI, or letter of intent, you're just going to highlight some of the bigger items to make sure that you get those negotiated. And you're going to save a lot of the other things for the actual legal contract, the purchase agreement. Now, the key components that go into an LOI are going to, of course, be the price. You're going to need the seller note term. How big is the note? How long is it? What's the interest rate? Does it accrue interest during a standby period? Does it have a standby period? How much working capital is included in the sale? Or how much inventory is going to be included in the sale? What type of transition is there going to be? How is the seller going to support or train you as the new business owner? Once you agree to these terms with the seller, next, it's time to go to the bank and see if you can get a loan. Now, this can be a little more difficult than you would think it would be. It's hard to get a good SBA lender on the phone. A lot of the good ones are busy, and then the not so good ones have a hard time getting deals done. Now, if this is something, if you need help with this, we do have a free complimentary service that we can help you through that loan process. Just reach out and we can connect you with some lenders that can hopefully get you to the finish line. But once you find a lender that has agreed to work with you, or you reached out to us and we help you with it, we're gonna have to pull together a few documents that are gonna be the most important things to determine whether your loan can go forward or not. Now, the most important are gonna be the tax returns for the business you're buying. Really, that's what lenders look at over the P&L. They essentially say that people can fluff their P&L, but the real numbers are gonna be in the tax returns, and that's what they really follow as true. They're also gonna ask for your personal tax returns, the year-to-date P&L. They're going to look at your personal financial statement. They're going to look at your assets and your liabilities. And then they're also going to require a business plan along with projections for the business. And of course, you're going to have to fill out one of their applications and they're going to run a credit check. Luckily, the requirements on the credit side are pretty low. You'll need a 680 or better is typically what they look for. You can even get it done with lower if you have a good explanation or if lots of other aspects of the purchase are really strong. So now after reviewing that information and if the bank thinks the deal looks good, they're going to issue what's called a term sheet, which is just an initial layout of the terms of the loan, showing they've given it an initial pass through and that they're ready to keep working on the deal. Now this is when the banks start to ask for some money. They're going to ask that you put $5,000 towards the underwriting costs. If the deal were to fall through, that $5,000 is going to stay with the bank because they're going to spend the money on underwriting the loan and on certain deal costs, but it will count towards your down payment. Now, underwriting is an extremely detailed process. You're gonna need to support literally everything. If the seller says that they were running some personal expenses through the business, you're gonna need to prove, one, that those expenses were paid, and two, that they truly were personal. You're even gonna have to prove out their salary. You're gonna have to show the W-2 statements that they received for their salary that's being used as an add back. Everything's gonna be supported, everything's gonna be backed up, and the underwriter is also going to quiz you and quiz the seller on every detail of the business to make sure that you truly understand what you're buying. So while you're working on underwriting, you're also going to need to have your legal team really start to work on the legal process of your business sale. Now, when you hire a lawyer, you need to make sure that you hire one with both M&A experience and small business experience, that they understand the SBA rules, or else it can get really expensive. They might look like a steal because they charge a lower hourly rate, but if they don't know what they're doing, they're gonna use a lot more hours, and that's gonna potentially put your deal at risk. So if they don't understand where the market is for certain terms, and they tell you to negotiate a contract that's way too far in your favor, if you win that, that's great, but you're probably not. It's more likely that you're potentially gonna lose the deal, or you're just gonna drag things out for a long time as both sides come together. And your attorney, they're gonna do some legal due diligence. If there are any patents, there typically aren't in this space, but they would check and make sure they're valid. They'll check trademarks, they'll check the name, make sure they actually have the right to use the name. They'll check to make sure that the sellers are actually legally authorized to sell the business, that there aren't any potential liens that could carry over even at an asset sale. They're gonna look through several things, and then they're also going to produce a handful of legal documents. So one of the most important is gonna be the operating agreement. That's the agreement that governs how the company that's gonna be used to acquire the business operates. No matter what, if you're doing a stock sale or an asset sale, you're gonna create a new entity, or if you already have an existing entity, you can use that. That's either going to acquire the stock of the business that's for sale, or is going to buy the assets of the business you're buying. You're also going to need an asset purchase agreement or a stock purchase agreement, depending on whether you're doing an asset sale or a stock sale. And this is the contract between you and the seller for the transfer of the business. They'll also draw things up like the bill of sale. They'll do the seller note. They'll do any employment agreements or non-compete contracts, and they'll put together a large series of schedules that'll be added to those purchase agreements. And once these are all ready, they're all going to need to be given to the bank at some point for the bank to review. The bank's legal team's going to go through. There'll probably be some back and forth between the bank's legal, your legal team, and the seller's legal team before those documents are finalized. In parallel, you're working on your legal, the bank is working on your underwriting. Hopefully now your underwriting is complete. Your BDO and the underwriter are going to take your packet to the credit manager of the bank or the credit committee. We would say typically you want to try to work with a bank that has a credit manager over a credit committee, because credit committees can be tough because you have lots of voices in the room, and there's always going to be someone that's trying to advance their career by trying to find, some issues with your loan, and then they're going to kick it back to you. So what you really don't want to see happen is that your deal goes to credit committee and then it gets kicked back because someone on the committee has some random question, and then you have to wait a week until the committee meets again, and then you go back to credit committee, they come up with another question and you go back. This can add a lot of time. Usually banks that have just one central decision point, that there's less politics, internal politics involved in the decision, it's It's usually a little easier to get things done. So once the credit manager or credit committee has approved your loan, then you're going to get what's called a commitment letter. It's going to look a lot like the term sheet. It's just obviously, as the name implies, a slightly higher level of commitment, and you're going to move into closing. Now, closing may sound like the finish line, but it's really not. There's a lot that goes into the closing process, which is why you're going to have to give the bank another $5,000 deposit to cover their costs. So typically with closing, you're going to start with a closing call. Closer for the bank is going to come on, give you a list of items they need, and these things are going to get really detailed. They're going to need things like the titles for every asset that's going to be transferred. They're going to ask for all those legal documents that your attorneys put together. You're going to have to go through, find out what insurances the seller had, and you're going to need to go and get new policies. You make sure you get everything covered that they had covered. You're also going to have to get life insurance. You have to get life insurance for the difference in the value of the physical assets and the business sale, so basically what we call the goodwill portion. There are life insurance companies that specialize in this type of term insurance. And once you've gone through this long checklist of items, typically takes a little over a month. In theory, it can be done faster, but usually we see they take about a month. It takes some time for the seller to really come up with some of these things. They're usually things that people don't have that ready. Then you'll finally get a closing date. It'll come really quickly. Some banks, you're sitting there waiting. Almost every deal goes past its end date. So let's say you had planned on closing on June 30th. You're going to bleed into end of July, and then things just seem like they're going on forever. You could even go into August. Things feel like they're just going on and on and on, and then boom, you're going to get your closing date. No more questions, the bank's ready to go, and then things are going to happen very quickly once they decide things are ready to close and they've set that date. Once you reach that point, you're going to feel like you're waiting forever, and then boom, into closing. Now, the actual process feels a lot like a home mortgage because the SBA loan has some similarities. Your home might be used as collateral, so you're going to have a lot of the same documents. It's a large loan, so again, a lot of the same documents. So you're going to sign a lot of paperwork. It's going to be a lot of things to sign that you're going to sit down. You can do them virtually or in person. Then once all that signing's done, then it's time for the hard part, which is going to be running the business. You're going to want to come in, sit down with the employees, with you and the seller, and announce it to everyone. And now you're in charge of your very own small business. So if you like this, give us a subscribe. We've got lots of other videos on our channel, and we're also coming out with videos all the time. We are in the trenches buying businesses every day. So as rules change, we're always trying to adapt with them and keep up with the market. Our business, we do partner with individuals as they're buying businesses. So we not only help you source a business to buy, we help you through the underwriting, we help you do the legal, we help you through the closing. We do everything we can during the acquisition phase, and then we stay on as a business partner where our team can help with things like marketing, doing the financial analysis, bookkeeping, and just helping in any way we can to grow the business, because as you grow, we grow.